So with that, we will now go on to what is now individual item number 7, which was consent item number 6. It is to approve a request to extend and increase the amount of contract for professional services between Mesa County and Western Colorado Business Development Corporation for the administration and management of a community development block grant revolving loan fund, and authorize the chair to sign. We have Scott Stewart, Mesa County CFO, to present this item. Thank you, Scott.
Good morning. The community development block program has been around since 1974. Every year, businesses here in Mesa County agree to certain stipulations and agreements, and we, as a county, can be a flow-through agency for the grant to these local agencies. This local agency just happens to be the Business Incubator. It is a federal grant. And as Mr. Kevin King brought up, there are stipulations, especially with federal grants. Staff looked into the more recent goings-ons with the affirmative fair housing let me grab it here. Trying to do this from memory here. Staff looked into the affirmatively furthering fair housing regulations. The HUD housing and the HUD organization, the federal HUD organization, they promulgate these rules. Specifically, we looked into these stipulations, which have been around for many years, back in the 80s. There is a new assessment tool that HUD provided to comply with these rules. We found out that in talking with HUD directly and with DOLA, that these stipulations, while they do apply to Mesa County in general, they do not. DOLA is the one that administers the AFFH regulations. As a non-entitlement county, DOLA provides that compliance for us. Now, the city is an entitlement organization, and therefore they do have to comply with those regulations. And in talking with the city, they have complied with those. There's no problems with that. And the next round of regulations that they have to comply with do not take effect until I believe it's 2021, I believe, is the year. And DOLA confirmed that. And so in accepting these grant funds that we will flow through to the Business Incubator, we are a non-entitlement organization, and therefore we do not directly have to comply with the AFFH rules. Any questions?
Commissioner McGinnis.
But, and I think since Mr. King's here too for his information as well as mine, but the city on that particular program, right, is that the name of the program, or that's just the purpose of the program that you just read to us? It seemed it had a different acronym to it or something.
So it's community development block grants, and in order to get a community development block grant, you have to comply with the affirmatively further fair housing regulations.
Anyway, that's the buzzword you want to look for.
AFFH.
And the city is in a position where they have to. So they're entitled, right? So they have to comply with that.
Yes.
And the ramifications, now I'm not an expert on this at all, but the ramifications that are required by that program are very significant, in my opinion. And it is, I think people are well advised to take a careful look at what those things are, because as I read them, I mean, we communicated that, it could call for, we may have zoning, or you may have a subdivision that you're in, and you've got a homeowners association, you have to build a certain size home, or you have to do some And this program can override that and require you to provide, I don't know, maybe low-income housing in your neighborhood, whatever. I mean, there's lots of strings attached to that program. And so that's a program, I can't address Mr. King since, but that's exactly the kind of thing I think that, kind of, let me put it, it's worthy of the time to look and see what we're getting on the hook for. Because if the average citizen out there knew about that stuff, they'd really be upset, I think. And it's only going to get worse. So at least we're protected till 2021 on these particular programs. Correct. That doesn't mean it won't come through, get through another open door on us. So we want to keep our eyes open for any of those that this is attached to.
Agreed.
Okay, any further questions, Commissioner Justman?
One of the things here that it says, we have an existing contract now, this is just an extension, so is this new extension different than the old contract, or is it just an extension of the exact same thing?
So this is a letter that will be written to the state organization that approves this. If they approve the letter, then the contract, yes, it'll be for an extension and for an additional CDBG dollars that will flow through again through the county to the business incubator here in Grand Junction, Mesa County.
Thank you. All right, any questions from the audience? Mr. King, do you have any questions?
Of course. Let's see. Kevin King, once again. I believe that letter's been written already.
A draft,
It's in the, I think it was in the documentation I looked at this morning. I guess I would ask the board to postpone a vote today pending actually making sure that whatever 15, whatever's agreed to in the letter, I can read it if you need me to, is not stipulated already under, what is it, F15 CDB 14-595. I couldn't find that anywhere, and it's not in the documentation on the county information for today's vote. So I would just request that I at least maybe get a copy of that somewhere for the record, so we can see what actually it says, and then maybe the overall grant of where this new $348,000 is going to come from. I looked, and as Scott said, everything's directed towards HUD, so I'm assuming that language is going to be in there, Commissioner McGinnis, and if it is, whoa, I think we really seriously look at this one.
Okay, Commissioner McGinnis.
So that's exactly the reason we continued it a month or so ago, Mr. King.
So this is continued from a month ago, this one specifically?
This is a different item.
Oh, it's a different one than the one? Yeah, that's what we did a couple months ago, or a month ago, to make sure that we weren't.
Yeah, and I think too, from a business standpoint, we're accepting $348,000. Who then oversees that it's spent like it's supposed to? I mean, we just blindly grant our trust these independent nonprofit organizations, and why aren't they applying for them directly? I guess is what's that relationship where why the county has to approve all this?
So I'm going to take a stab at it, but I've got experts in the audience who can probably actually answer this question. So basically, this money flows through to Mesa County. We don't administer it because we don't have the expertise to do that, and so we basically have a contract with the business incubator to administer the program. It's a revolving loan fund, so small businesses that can't get capital because they're not quite at the level where a normal bank institution would lend to them, goes through this program and is able to get these funds through the revolving loan fund.
Okay. So yeah, no, I know what you're saying there. So, but here's the thing: when that pass-through happens, now it's at a nonprofit organization. You can't access that with Colorado Open Records Act or by FOIA request to see how that's spent.
I think you should be able to. and John's in the audience, he's going to have to help me, but as far as I know, they are open meetings, they are posted just like we do.
I looked this morning, and maybe I looked in the wrong place on that specific fund, revolving fund.
Okay.
And all it is a fluff piece that's on there for their 2015 or annual report. There was no specific what they did with that revenue that they're receiving or tax dollars that they're receiving through this grant.
Great. And Commissioner Justman also sits on that board. So, but like I said, I'll have the experts come up and they can explain it in a lot better detail than I can.
Okay.
And just for the record, so this is a request. If it was actually granted, we would have to go through another process through public hearing to actually accept the grant. So I'm not opposed to what you're asking us to do, just for the record. But so even though we're asking for an amendment to the grant, the amended grant would have to actually come through public hearing at a different date if our request is.
So if they agree to the extension for that money, it would have to be accepted separately?
Yes. So this is step one of the two-step process.
Okay.
They'll send the contract, which is, I think, what you wanted to see, the draft extension
Well, what we're all
along
on the hook
with
for.
the original contract, yeah. And then that'll be submitted, hopefully with the increased dollar amount, and any other terms they think have to go in there, and we don't know what those might be yet.
Okay. And Commissioner Justman, one last question. So if a company takes money, I think it said up to $300,000 is available. If they took $300,000 in default on that, who's on the hook for that?
Patrick, you have an answer? I don't.
Well, we have an expert in the room.
Yeah,
Maybe
I'd love to hear.
Okay. No, that's great questions.
John.
So John and Dean. Okay, just introduce yourself for the record.
John Marishin, I'm the Executive Director of the Business Incubator Center, and I've got Dean Didario, who is the Director of the Business Loan Fund of Mesa County. I will defer to Dean on most of the questions because he lives, eats, and breathes this stuff on a daily basis. So to the question of open meetings and those things, we do not hold open meetings on our loan committee,
Okay.
specifically because of the sensitive information of the clients, their financials. You wouldn't give me your financials to put on public record any more than these companies would. So we're very sensitive to that, but we run it, I would argue that our loan fund is run better than any bank in the state of Colorado, and our losses and our records shore that up. So from that, that's the easy question. Yes, sir.
Now, you may not give the information of their particular books, but it's public information, which loans are in default,
Correct.
what the overhead expenses are in the administration, and so on. So the public may not have access to their particular set of books, but there is information on an
Correct.
applicant. Why don't you explain to us what would be public?
Absolutely. So the names are public. In fact, Dina, you probably have this better than I do. Because it is public money, the names, the amount lent, generally the terms, repayment, we don't post their delinquencies. We do post all that information, so it is available.
Aren't the delinquencies public information as well?
Yes, and those are all fully disclosed.
You do post those,
Yes,
I'm
sir,
sorry.
and those are all fully disclosed in our loan committee, which, I'm sorry, our board meetings, the Business Incubator, which Commissioner Justman attends to, so those are given to him
And then
as well.
would you just verify what the chair said, or not verify, but just tell us when the meetings are, they open the public, posting any of that kind of information, help the public?
Our meetings are actually not public because we're a standalone 501c3. They are the first Wednesday of every month at 7:30, and if somebody would want to come to our meetings, you're certainly welcome to request that. We pride ourselves on being transparent, so if you want to come to one of our meetings, you're more than welcome to just request that, and we would like to have you there. We do take this pretty seriously in how we are stewards of the public money. So, Dina,
John,
yes, ma'am.
and so just to clarify, yes, so our Commissioner Justman sits on the Business Incubator Board, but the commissioners don't actually sit on the loan fund. We actually are not involved in that, so there is a distinction between that. But John, I thought when I pull up to the Business Incubator meetings, there's like a posting in the window that talks about that there's a Business Incubator meeting.
Those are for the Riverview Technology Corporation,
Oh, okay.
which we do hold under, because it's a joint venture of the city and the county, we do have our subject open meetings for those meetings. So we do post those meetings. And to get into the structure of the loan fund a little bit, and like I said, I've got Dean who runs this, We actually have a separate loan committee, which is a subcommittee of the Board of Directors of the Business Incubator Center, that we run that way specifically to keep public influence and board influence on the decisions that are made. It's one of the reasons it's the number one incubator, or the loan fund is recognized as best practices within the industry. So if anybody wanted to influence the decisions, they simply can't. The committee is a member of our peers. We actually do try to honor some of the HUD requirements as far as the level of income of the people on that loan fund, but we've got bankers, CPAs, those folks who make the decisions, and then a board member of the incubator sits on that as well. And so those meetings are not public by design, but the incubator meetings, we certainly are open to people attending those.
Thank you. Dean? Dean, just introduce yourself for the record, please.
Sure. Good morning, Dean Didario, Business Incubator Center. Let's see, I don't know where to start. Probably I'm not sure there's a good understanding of exactly what the loan fund in Mesa County does. And it, as you mentioned, it provides gap financing for businesses who can't get financing from the banks. So we've been in existence over 30 years, or pretty close to 30 years, and have lent out close to $24 million in our history and created over 2,000 jobs in Mesa County. So this specific request is to recapitalize our loan fund for $348,000, and with that, based on our requirements, that will help create or retain 18 jobs and leverage an additional $700,000, because our financing very much is to help entice banks to do a larger loan to that business, and therefore leveraging our dollars. And was there any other question I missed?
Can you talk about the delinquency rate? I know we had this conversation the other day as well.
We did. Through our history, again, close to 30 years, we've had a loan loss rate of about 4.5%. Recently, I was asked, well, that's great, but what have you done in the last 3 or 4 years? So I did go back and look, and we were at 0.7% loss in the past 3 years, which compares very favorably with the banks, some of the best banks. So we're pretty proud of that. We take very good care of our money, and we have found it's particularly rewarding riding around towns. We see lots of businesses that literally would not be in existence without these dollars. So they're valuable. We've proven that our administration of those funds we take it very, very seriously, and we feel it and we hear about it when we lose money, and we don't like doing that either.
Great, thank you. Mr. King, do you have any further questions? Come on up.
Question I asked is when the defaults do happen, who's on the hook for that? And then he mentioned, just because I didn't understand the process here, what they are, as far as what other lending institutions that they deal with. Are they local banks? You said something like $700,000 of lending. Maybe you can explain how that works, maybe.
I can add something later.
Sure, and Commissioner McGinnis also has a question to add on that.
Yeah, Mr. King, while you're up here, so that's exactly the questions. Last week we had a meeting, went through a lot of this stuff. In my opinion, most of these revolving loan funds are not, have very high delinquency rates, are in no kind of enforcement. Denver's an excellent example. The state's discovered a few of their programs they have that they haven't really kind of monitored, and as a result, these monies aren't paid back and so on. And there's a saying out there that the new bank in town gets all the bad loans, and there's a reason why banks don't loan money to people and so on and so forth. So we went through this whole thing last week because the whole commission was interested in exactly the points you are. How's this monitored and so on. So I think your questions are legitimate. At the end of that, I felt comfortable that actually they're doing a pretty good job with it, but I just wanted to insert that before they answer your question.
Yeah, you can understand where most of these are coming from is, and unfortunately the airport set that precedent here in town of having a board go south and what could potentially happen. So, we got to learn from those things moving forward.
That's exactly right.
So 2 quick clarifications to John Marishing to the questions. First is who is on the hook. I think the borrowers are on the hook. We have a saying at the incubator that we're not a charity. These are not grant funds, these are loan funds. And so when the money is lent to the borrowers, we underwrite them. We underwrite them very strenuously. We take lots of collateral. We're fully compliant. Obviously, we have to because we're a lender, but the borrowers are. The community is not on the hook for these loans. And we have borrowers who, a good case in point, went to refinance his house when he filed bankruptcy or defaulted on us several years ago. He's now writing us a check to pay the loan off, even though we've written it off in compliance as you would with our credit ratings. So the borrowers are on the hook, and we're very, I would stack our credit standards up to any bank in town. The second question was the bank relationship. We don't open checking accounts, we don't do credit cards, we don't do visas, none of those things. Because of that, we've got a very good relationship with all banks in town because we create borrowers for them, we create value for those borrowers, or for those banks. And so when those borrowers aren't able to get money from those banks, we require the borrowers to go to the banks first and be turned down. They come to us, and if they pass our standards, we'll underwrite them and we'll lend them the money. Now, we don't always, we turn people down just like any bank would. And what Dean alluded to, the leveraging of money, if you have a borrower that needs $100,000 and the bank can only get to $80,000, most likely due to collateral, we will do the other $20,000 and subordinate to the bank. So we actually help the banks leverage their money. I'd say a lot of our best loans are with banks. So you have almost a double level of due diligence where they are underwriting it, we're underwriting it, we're working very closely with them. And every bank in town, except for one that I can think of, we've done loans jointly with them. We do an awful lot of our business with the community banks because those ones seem to be really focused on community borrowers. Alpine Bank is a phenomenal group to work with. Timberline Bank, Bank of Colorado, we like them very much and we work very closely with them. So it's very important that this is not charity. These are not grants from our standpoint. We lend them just like a lender would. Now, it's very expensive to administer a loan fund at that level. We have lawyers on speed dial. We spend an awful lot of time working with them. But we take this money very seriously. The other point that I think is important is the money that goes into the loan fund does not go to the incubator for operations. I don't have the ability to go to that money and take it and pay other people with it. That money stays in the loan fund and for loan fund staff. And right now we have 2.5 FTEs. We actually were at 2. We're at 2.5 now because we're growing and we're lending lots of money. The money revolves, comes back into the pool. It's lent out again over and over and over. And that is the magic of a well-run loan fund. Our neighbor to the south is inverse of us. Their losses are about 90%, and we're just exactly the opposite. So I think that's an important distinction. When you hear about the incubator getting money, it doesn't go to the operations of the incubator. This is actual loan fund money that stays in the loan fund. So any questions on that?
Thank you. Mr. King?
Sure.
Sorry, I don't mean to extend this out. 2.5 FTEs are paid from the revolving fund. Is that what I misunderstood there? So there are operations.
Yes.
Part of those monies that go.
We don't have unicorns that run the loan fund, so we actually have a lot of staff. These are very labor-intensive. If you can imagine lending money to somebody, the first hurdle is they're very unsophisticated. If somebody's starting a new business, we have to train them how to run the business. The second level is lend money to them, and we have to monitor it. We have to do compliance, financials, reviews, just like a bank would do. So that does take staff.
Okay, so 2.5 FTEs for $1 million or $800,000.
The loan fund actually is close to, about $5 million total. So that money we've gotten over the years stays in there and goes and revolves. And so it's lent out to more businesses. It's paid back to us. It's lent out again, comes back. So we actually are running about a $5 million loan fund. This is a small part of it.
Okay, so the taxpayers that pay into the grant monies don't see any of that. It stays and just continues to revolve. I don't know if I understand your question. So the money passes through the state of Colorado, comes to the loan fund, we lend it out, comes back. Exactly. It's lent back. So you see, It never gets repaid back to the original.
If we default, if we were insolvent and the incubator ceased to exist, yes, it would go back to the funding sources.
Fair enough. Thank you.
Okay, thank you. Anyone else in the audience that has any questions regarding this item? Okay, seeing none, I would. So Kevin, what I'm thinking is that we submit the letter, because I don't know that the grant that comes back is going to be the same grant, even though it's an amendment and an extension. I don't know that it's going to be the same grant that we have now. Does that make sense? So I don't know that we would waste our time necessarily with the existing grant without seeing what the new grant agreement looks like. Does that make sense? So what I'm thinking is that if this board approves it, we would submit this letter, and then if it even gets approved, then we can kind of take a look at what the grant comes in looking at like, and see if we have any issues with the grant. Does that make sense?
Yeah, just to clarify that too, Did we already accept, was it already accepted, what Scott mentioned earlier in the last one? Did we accept that already? I mean, did we look into that yet? I know another issue came up similar, but have we looked, when you guys accepted that monies from this one that we're trying to extend, was that this new one to be cautious of, this new requirement? Was it in that one?
Yeah, I don't know. So, so you make a good point. So we still have to look at the underlying grant.
Yeah.
Although it'll be up in 16, and so if we don't do this, then the grant goes away.
Okay, I think I looked on the website this morning, the grants, the 16 allocations were at least being released a little bit on HUD's site there.
So what if we were to submit the letter now, get the old grant, track that down, take a look at those requirements, and then when the new grant comes in, we can also compare the old grant with the new grant to see what additional requirements
That
are
should be
in.
searchable on Mesa County, right? I could just go in there and punch in that grant number,
Well-
and it should bring up that documentation.
We'll get you a copy.
Okay, perfect. Thank you.
Okay. All right. Thank you. All right. So I think we're going to submit this letter, or I'm in favor of submitting the letter and then investigating the grant in better detail. Is there any other discussion from the board on that item?
No.
No? Commissioner McGinnis?
No.
Okay.
Yeah.
All right. I would entertain a motion then to approve the letter.
So moved.
Is there a second?
Second.
All in favor of the motion, say aye.
Aye.
Aye. Motion passes. Thank you. And thank you all for being here and explaining the revolving loan fund. You did a better job, Dean, of course, than I would have done. So I appreciate you being here. And John, thank you, as always.